Okay, we're going to take our short position here, 6 contracts on oil. We got our fill. Oil here is $10 a tick times the 6 contracts, so you'll see price P&L moving in increments of $60. We'll probably go for a 10 to 12 tick profit target here. Let's go ahead and set this trade up real quick first for everybody so they can see what we're looking at. First of all, on 2-minute charts here on the left, we're looking at price. So let's connect these two lines right here. On price, you see it's a horizontal line, which means it made a double top. And then let's compare that with our 2-minute indicator crossbow here. And you can see how it's a downward slope. So it's out of balance. So that suffices our first criteria for this trade. Now what we have to do is make sure it does the same thing on the 1-minute chart. So let's go to the 1-minute chart here and draw our horizontal line here on price. If it's a horizontal, if it's a double top on 2 minutes, it's going to be a double top on 1 minute. So, but just for the sake of showing you here. And then we're going to compare it with the crossbow, and it is a lower high. So it's both of these are out of balance. So our first two criteria are filled. Now we got to compare and look at the orientation of where this archer arch on price falls on a crossbow. We look for equilibrium. It falls on one intermediate line right here. Okay. Ideally, we want it to fall on 0 to 1 lines on the 2-minute and 1-minute for the highest of probability trade. So let's see where it falls here. Well, here it falls on 0 intermediate lines or 0 lines. It just kind of hovers right above this intermediate line right here. So we have 2 out of balances on the one on the 2-minute and one on the 1-minute, and they both maintain an orientation of 0 to 1 intermediate lines or 0 lines. We're going to set our stop here for 6 ticks. It's just 1 tick above the high, and as I said, we'll go for 10 ticks on this, but let me go ahead and I know it's a little tough to see the 2-minute and 1-minute. What I'll do is I'll go ahead and label this so it's a little easier to see here. And this is our 2-minute chart, and let's adjust the font here. 228, I think, is what we'll do. There we go. Okie doke. Alright, there's our 2-minute chart. Now let's go ahead and label our 1-minute chart here so it's real clear for everybody. Sometimes when you make these recordings, they get a little blurry. It makes the charts a little blurry. So here we'll just make this so it's easy for everybody to read, because it's really important we have confirmation on 2 and 1 minute. That's a key. Okay, there we go. Let's slide this over a little bit, and we're off to the races here. All right, let's see what this trade does for us. All right, we have our stop in at break even right now. We got our 10 tick profit target in, so we're going for 600 on here. Remember, $10 a tick times the 10 ticks, which is $100, times the 6 contracts, which is 6 times 100 is 600. Less any slippage, that's what we should hit, or we get stopped out at 0 because we have our stop now at break even where we entered the trade at. And of course you have commissions on that, and of course any slippage, of course. But let's hope for none of that. The market's moving pretty slow right now, and we have enough volume to most likely get out at our price for a stop. But it looks like we're hitting our profit target, and it looks like we're making a nice strong push through, so I'm almost 100% sure we're going to hit our profit target. So there's no need to get out early or anything like that. This thing will punch right through. I know it's on a big support line right here. This is one of our Archer zones support lines, and there it is, 600. All right, well, there it is. We looked at the trade here, the out of balance and the orientation of the trade on the 2 minute, and we did the same thing over on the 1 minute. And this trade worked out real nice on a very high probability.